Today we're going to be looking at one of my favorite trading strategies, so let's get straight to it. Hey trader devs, I hope you're all going extremely well. My name's David and welcome to my channel where I go through trading strategies that I find on YouTube and on the web, and then I use code to debunk the bad ones and find the good ones. Okay, so I don't know if you remember, I actually did do a video about market structure not that long ago, where I said I was going to start building a series of videos on order blocks and things like that, so I thought I better start that this week. I'm going to add videos daily to the website so that I can go through the building of this indicator, and then I'll do some weekly updates on YouTube here for everybody to see. So about 3 months ago, I started learning Wyckoff theory and some other indicators and Elliott wave and things like that, and quickly realized one of the most important parts in all of these strategies, whether it be smart money, Elliott wave and all of that, is actually market structure. They're all based on market structure. Breaking those higher highs and lower lows, it gives us our trend direction and helps us to know whether we're in a continuation or actually a reversal. So what I'm going to do is I'm going to start with that as the indicator. I'm going to build that indicator. I'm going to go through with you very quickly what I'm going to be building. Then I will add other indicators for confluence and try to find the best possible entries. I will of course convert all of these into strategies so that we can backtest them and make sure that they're working throughout the whole of the process whilst doing it. Okay guys, I guess the best idea is to get over to my computer, start having a look at what we're going to be building today, and then code it. But if you do enjoy the video and you find some of the information useful, if you don't mind just hitting that good old thumbs up, it helps me to build the community, and the more the merrier, because that's just the way it is, I guess. Okay, let's get over to the computer. Okay, here I am on my computer. Just wanted to say thank you to everybody who's now subscribed to the YouTube channel. We're over 75,000, which is absolutely amazing. And in the next couple of weeks, I will be doing a great big giveaway, so do subscribe. And information about the giveaway will be found in the description below. I'll be making a couple of multi-millionaires in Shiba Inu and some couple of good old things like that. Anyway, let's have a look at this strategy. Okay, here we are back at the charts. I have put a little bit of a chart together here so we can look together and understand. I believe that market structure is probably the most important lesson that I personally have ever learned inside of trading. Ever since I've learnt what higher highs are, what higher lows are, what creates a market and bullish and a bearish market, we will look at in a second. I've kind of understood it helps us to trade in with the direction of the market instead of completely against it, and also getting liquidated and crushed. So when we're inside a market, to find a trend, it's pretty simple. This is all going to be pretty simple stuff. But a bullish market, we're continuously making higher highs and higher lows, and in a bearish market we're continuously making a series of lower lows and lower highs. Understanding this, although this looks like a perfect trading situation and this could be more what you are actually trading, understanding this is probably, like I said, something that will turn you from a bad trader or a average trader into a very good trader. So when we look at the charts over here, let's have a look at what happens in a bullish run. Obviously we're creating a high here and creating our first low. The low is considered a strong low, which we'll look at a bit later, but that then pushes, because the job of a swing low is to push up to the next high. The high is pushing up and breaking that structure. As it breaks up structure and creates a new high, we can consider that we're either breaking a previous trend or going into a bullish structure. So as we come back down, we're creating a new low, protecting our previous low here, not going any further back. Then we go up and create a new high, breaking structure once again, and then come back down to create a new low. Now that low, obviously, as I said, can go all the way back down and retrace as far as it wants, but as long as it doesn't go lower than the previous low just here. That goes off and continues up and continues our bullish structure. Now, a bearish structure is the other way around. We're creating new lows. We create a lower. Well, we're just creating a high for the first high, I guess. Then we go down and we break our structure. The job of this high is to push structure down and create new lows and break our structure. By going lower than the previous low, we're breaking structure, which we've written here as boss, and we're creating a new low. We're then going to go up and create a higher low, and so on and so forth. Breaking structure as we're going along, and then breaking structure by pushing lower than the previous lows and creating a bearish situation. Now, obviously, the problem being for most traders is that they're obviously, a lot of people are a bit too zoomed in. They're most probably trading this area here, not realizing that all of the market's actually moving in a bullish trend and they're actually moving against the market. So it's always very, very important to zoom out, especially as we know that markets are fractal, and inside each and every one of our up movements there's a continuation of up and down movements on lower time frames. So to recap, obviously a swing low is the lowest point caused by a high. So a swing low is caused by a high, and a swing high is obviously a high which is caused by a low. It's the highest point between two low points. A BOS, or a break of structure, is when we break above a previous high or below a previous low. There's also a COT, which is called a continuation of trend. So when looking for a trade, when we're looking for a break of structure, we know that we're in the bullish area. I wouldn't just jump into a break of structure and enter just on this line here. I would actually wait for us to go up and create our high, and then go in and find some confluence or something inside of this pullback, because we're probably going to get a better entry by waiting for the pullback than we would if we jumped in at the break of structure. The problem when breaking in structure is that we're going to dig deep into our stop losses as we come a bit lower down here. Okay, on to the next bit, the strong and weak highs and lows. This is all very, very simple, so I do hope you take something away from this, but I will be building an indicator at the end, so I just thought I'd go through all of the information. So strong highs and lows. So when you think about a high and a low, the way that I've learned about this is that the job of a low is to create a new high, and a job of a high is to create a new low. So any lows here, so if you're looking at these strong lows here, they're creating new highs, so they're pushing up to new highs. There's a lot of money in this market protecting these lows, pushing up and breaking the structure, meaning these are weak highs because they are being broken. On the other side of the table, we have the strong highs. Now the strong highs, its job is to push the market down. There's market pushing, lots of money in the market being pushed down, so they're pushing down and breaking structure. The job of this high up here is to push down and break that structure and create a new low. Then it follows on to the turn of the low, and the low pushes up, and because it's a weak low, it doesn't get high enough to create a new high up here. It just creates a new low, a lower high, meaning a weak. This is considered as a weak low. Understanding this concept helps us to understand that when we're trading, these are protected zones. Our previous highs are protected zones. That helps us to understand that when we're taking our trades, we're to add our stop losses and not to worry too much about our trades, because like I said earlier, there's a lot of money going into a market like this, pushing price up. Meaning that there's hedge funds and banks, they're all in there putting their trades in around these zones here. So all of these lower stop losses are actually protected against coming back down that far. So if we're trying to get into the market somewhere, we've realized that these lows are protected. We're going to go and take a long here. We could take a long position, adding our stop loss to the previous low, knowing that we're expecting it not to break that low. And when we could target up above, we could target this weak high here, knowing that we're expecting that it will break. And then you can consider taking profit at the break of structure here and letting it run. And you can let it run until a price breaks structure in the opposite direction, and where you could exit your trade. Okay, here we are at trend change. So obviously, as you know, markets move from bullish to bearish constantly. So you can be in a market which you're expecting to continue and the actual trade moves against you. So this is how we identify a reversal. So we're moving a long, we're creating our highs, we're getting the entries into the market as we're going and breaking these structures here. We're getting entries as we go along, correctly so, expecting markets to continue to the upside. Unfortunately, the market reverses against you, coming below this previous low here, which means that we technically, in my eyes, we are getting into a bearish market. Now, some people expect to create a lower high before actually taking any trades for confirmation. But it depends on your trading style and your risk tolerance. A lot of people also tend to start getting into bearish trades around this area here, as we've broken below and created a break of structure. As you can see, we'll continue down, we'll continue breaking structure to the downside, and obviously as things get better, we start going back up. So that's how we identify trend change. Pretty simple stuff really. Like I said, just looking for break of structure to really pretty much to confirm most of our trades. Okay, change of character is either the first sign of strength or weakness in a market. Can be used for reversals, as I'll show you in a minute. Or can also be very, very good for getting us into entries on a pullback. So what the idea is that, as you know, most probably, markets are fractal, meaning that inside of each and every up thrust we have ups and downs on lower time frames. So for instance, this down here would have ups and downs all the way through it, as candle patterns, and also on lower time frames. Same going for the way back up, we'd have ups and downs as we break through this break of structure. If we were zooming out here, it may look like our pivot point inside of our indicator would look more like this, or if we're looking back at a lower number of candles or on a smaller time frames, we could have a structure that's starting to look like this. So a change of character is the first sign of weakness in this pullback here, which is pretty much the same sort of thing as a break of structure, but on a lower time frame or a lower number of candles looking back. So here we have our change of character. So if we're correctly doing the job, we know that market's structure in the bigger picture is in bullish, and this is technically a pullback. We're looking to take an entry to follow our trend. So we could actually get a good entry here for a long, just by using this change of character here, adding the stop loss just to the low here and continuing the pattern, getting a much better entry than the break of structure, which is up here. Change of structure can also be used for trend reversals, very much in the sort of style of ABC patterns that I've been trading myself for a long time. Change of character is great for finding reversals on the smaller time frames inside of the bigger picture. So obviously you know that you're here in a uptrend and could look very much like this. Inside of the picture you can start to see some weakness thanks to the change of character, and you could get a reversal entry short in at the change of character just here, getting a very small stop loss like the ABCs as I've been trading, as I said, and improving your risk to reward immensely by using those change of characters. Okay, I hope you've managed to take a couple of bites of information away from that. I know there is a bit of beginner friendly information, but I believe that this is something that is essential to the success of the indicator that I'm building. Right, I guess the best idea is to get to my computer and start coding this so that we have an indicator on our screens, and I can also provide a couple of backtesting results so that we can see whether this trade structure idea actually works. Right, let's get to it.
Come on, David, and once again he's going to code a new strategy. He'll be back in just 5 minutes. RSI and MACD. If he doesn't run into any bugs, there will be a new strategy. Come on, David, hurry up. Come on, David, show us what you got. Come on, David, our patience running out. Come on, David, show what you got?
Okay, here we are back on my computer. I have pretty much finished coding this. What I've done is I've managed to do a candle structure for the change of character and a full sort of like pivot structure where you can decide the number of candles to look back at to create our pivots for the breaks of structure. Personally, I think it's absolutely brilliant. I think that anybody using this, I hope, will help them to not FOMO into the market, as you'll be able to see the way that trends are going. I've also built a strategy so that we can backtest it. I will convert all of this into bots in the long run with further indicators for confluence. I need to find something that will give us great entries inside of this trend structure. So let's have a look at the indicator very quickly. As I said, it's very much going to be built inside the community, together with the community, so that everybody can see. But I have actually taken a couple of trades off of it. I've been building this one for a couple of days now. My first trade was on Luna, thanks to this indicator, which was on the 6th. Now I have to find it. I was on 15 minutes on the 6th, I believe. So all the way back on the 6th up here, the 6th of April, I actually took my first trade on this break of structure just here. So the market was quite bullish, and then we had a break of structure here. It created a new high, a lower high up here. I waited for the break of structure here, and I got my first entry. Now I put the stop loss at the change of character line just here, as you can see, which gave me a 0.75 stop loss. Now I did take some profit as we broke structure just here to the bullish side at 6.5% profit. And then I left the rest to run, and currently it is at just under 20% profit. So that was my first trade. As you can see, the risk to reward on it was 26, which was absolutely amazing. I do like this trading strategy a lot. Let me show you one or two things from the back testing. Right, okay, so if I go over to the 1 hour here, I'm on Luna, and then if I just pull up this strategy just here, as you can see, the strategy just on this, the break of structure. So I haven't taken into account in the slightest the change of character, which I will do in the future. Just on the break of structure, look at the net profit on that 20,000%, which is absolutely ridiculous. If you go over to the 5 minute, 106%, zero leverage, 241 trades, 51% net profit, and like I said, it has absolutely zero other indicators on there. We're just using those break structure. If you go over to Bitcoin, I believe that was profitable as well on the 5 minute. 5 minute, not as profitable, 16%, but I suppose it's not too bad. On the 1 hour, we're at 1000%. If I go over to something like Ethereum, 2,128%. I believe if I go to something like BNB, 6,900%. Dogecoin, for any Dogecoin lovers out there, let's see if we've made any money on that. Dogecoin has an absolutely awful markdown, but it still is 4,737% in net profit. So just with the simple break of structure, as you can see on most coins, on most time frames, it is actually profitable. I need to find more confluence inside this trading strategy for actually trading it with bots. I hope you enjoyed this one. It's about 4:30 in the morning, so I'm going to go to bed. I will see you with even more improvements to this indicator, but I certainly am excited about it. Take care, keep safe, keep coding. Take care, guys. Goodbye.
And once again, he's gone to code a new strategy. He'll be back in just 5 minutes. RSI and MACD. If he doesn't run into any bugs, there will